Crypto is in a tussle now, not just because the economic conditions are not favorable, but because it's struggling with its acceptance in the United States. Even the US Senator Elizabeth Warren once revealed a negative stance towards the industry concerning the fallout. This was after the FTX meltdown. Warren wrote that the crypto industry is on a well-worn path of financial innovation, which starts with the exciting rewards, but ends in the crippling losses. She compared it to the subprime mortgages of 2008, penny stocks, and credit default swaps. Our biggest fear is that this might become the specific narrative for Cardano ADA. The senator, Elizabeth Warren, said what happened with FTX should be a wake-up call to regulators to enforce laws on the industry. However, on Twitter, some agreed with the senator, tweeting that the crypto industry is just smoke and mirrors and that Warren has been trying to warn the public all along. Many pointed the finger back at her, perhaps out of a greater deal of optimism and support for crypto, saying regulators don't understand the industry and incite fear with such comments. We've been here for the longest time, and so far most of the crypto market's growth has been fueled by the promise of investing in the world's next financial system, and for several benefits over the traditional financial system. Transactions and inherent value of cryptocurrencies are supervised by the general public instead of a central authority, such as a bank. The promise is that since it gives the public power that is often vested in governments, it is much more private and more secure, although that's more like an irony. Crypto investors even tout that that is the future of money. The entire premise of what is called Web3, a generation of open source and interconnected decentralized applications powered by blockchain architecture, which is also known as the future of the internet, is based on the tenets of decentralizing authority and offering more privacy and security. Crypto wants to be the world's next money, but it's a security nightmare. Despite the attraction that decentralization and anonymity bring, the world of cryptocurrency remains plagued by significant security vulnerabilities. But there's another beast that plagues crypto. It's the wild price volatility. Bitcoin, Ethereum, and other cryptocurrencies have fallen sharply since hitting all-time highs. The Bitcoin price surged over $60,000 per Bitcoin in 2021, giving the Bitcoin network a market capitalization over $1 trillion. But the losses have beaten the prices hard. However, the crypto market's price research has revealed that Bitcoin, Ethereum, BNB, XRP, Cardano, and other major cryptocurrencies could hit the $1 trillion mark if they continue to grow at their average annual growth rate. Well, this research was conducted last year. It was predicted that Bitcoin, with an average annual growth of 159%, could return to the $1 trillion mark as soon as early 2023. According to research from the digital asset industry review and analysis website CryptoHead, which excluded any coin created after January 1st, 2019, including Solana. Ethereum, with an average annual growth rate of 308%, was also projected to become a $1 trillion asset around the same time. Ethereum rivals BNB and Cardano with an average annual growth rate of 615 and 423% respectively, were forecasted to hit a $1 trillion market cap by 2024. Down to the charts, Ripple XRP, which was still the subject of a Securities and Exchange Commission lawsuit with an average annual growth of 88%, was put at $1 trillion by the end of 2028. The cryptocurrency with the highest average annual growth rate was Phantom at just over 5,000%, with a market cap of $9 million in 2019, and was predicted to be on track to hit the $1 trillion mark in 2024. However, things may not go as planned or predicted. Nevertheless, last June, according to the founder of crypto capital venture Dan Garmedello, Cardano ADA was just 62x away from hitting the $1 trillion in market cap. He tweeted on June 26 of 2022, around a 62x for ADA to hit $1 trillion market cap. According to him, the leading cryptocurrency initiatives like ADA appear to have intensified their growth and expansion amid the bear market. A major milestone was reported by Input Output Hong Kong, the organization in charge of creating the Cardano blockchain. Cardano has continuously managed to hold on to a position in the top 10 list of development activities on GitHub. Compared to other well-known networks like Ethereum, it was superior in terms of development activity at the beginning of June of 2022. A light wallet was also developed by Input Output Global. According to a blog post, the same tool, named Lace, would enable users to manage, regulate, and store their cryptos all in one location. Around this time, Charles Hoskinson, the inventor of Cardano, stated at the consensus of 2022 that the Lace team had been developing the wallet platform for around 6 to 7 months. However, the wallet was still under development. According to the company, it would help increase adoption rates by giving cryptocurrency consumers improved capabilities. The chief executive also emphasized that the wallet would constantly change and that new features would occasionally be released. Of course, the benefits of Cardano are attractive in luring investors to invest in it. However, it is still a new coin. It is a 6-year-old cryptocurrency that has witnessed slow and steady growth, all while the crypto market is supporting eco-friendliness and promoting related cryptocurrencies. It is not certain how long this eco-friendly bubble will last though. Another hilarious fact is that since the market is weak enough to run on tweets, one tweet can make or break Cardano. If we compare Cardano to Bitcoin and Ether, Cardano is still quite young, so it is not quite capable enough to take over Bitcoin and Ether anytime soon, so it's best for you to scrap that imagination. According to Charles Hoskinson, Cardano won't achieve its entire vision until at least 2025. Well, Cardano's NFT industry has been gradually expanding since the beginning of the year, even in the face of the crypto community labeling the network as a quote-unquote ghost chain. Weekly data from StockTwits, NFTs, unveiled that Cardano NFT floor prices have propelled 22% higher than Ethereum's, highlighting its increasing adoption among market participants. Cardano stands at the 6th largest NFT protocol, trailing Solana, Polygon, and Ethereum. Still, despite the proof-of-stake network's recent triumph, it is also worth noting that it is miles behind its competition in terms of trading volume. While NFT floor prices may have surged, Ethereum's titanic $14 million daily NFT trading volume trumps Cardano's modest 164,000 daily trading volume. StockTwits tweeted recently, the Cardano NFT floor price index is 22% higher than the Ethereum price floor index right now. This is a comparison of the 7-day charts. In stark contrast, Solana and Polygon recorded daily trading volumes of 1.5 million and 2.1 million respectively. Nevertheless, Cardano's achievement represents a significant milestone for the network, considering that its NFT ecosystem only took off less than a year ago following the Vassal upgrade. While Cardano NFT's industry still has a long way to go, the expectation remains highly positive with its current momentum, and Cardano could outshine its competitors like Polygon, Solana, and even Ethereum. As comparisons between Ethereum and Cardano continue to percolate in the digital asset ecosystem, Charles Hoskinson has stepped in to defend his project from critics. On August 16th, X user WhaleChart quizzed followers on whether or not Cardano will ever become a worthy competition to Ethereum, prompting a wave of responses. A response from user identified as oxnly.arf claimed that Cardano is merely following Ethereum's roadmap, and within 6 months, Hoskinson will ditch the entire concept of Hydra. In 2020, Cardano unveiled plans for Hydra as a layer 2 solution for the network to improve its speed and scalability using sidechains. Responding to that user's predictions, Hoskinson reeled out Cardano's innovations, noting that Hydra has achieved a mainnet launch as it continues to experiment on novel ways around transaction fees. It's getting to Delusion Town. Hydra is live on the mainnet and evolving fast. Mithril is live as well and is the first step towards a rich DA and light client strategy. We've already designed a significantly better way of handling transactions via tiered pricing and Babel fees, Hoskinson stated. Hoskinson's response took swipes at Ethereum's programming model, poking holes at the dominance of its layer 2 solutions. He stated that with Hydra, Cardano's sidechains would offer many benefits to Cardano in a mutual relationship. Meanwhile, Ethereum had a dumpster fire of a consensus layer, a terrible programming model that they can't change, and is getting eaten alive by their own layer 2 ecosystem. We are living rent-free in the Maxis' minds. I pity them, Hoskinson commented. Cardano has received flack from critics over the slow pace of its development and its perceived lack of use cases. Hoskinson had previously stated that it would adopt to a slow and steady approach towards the development to avoid major pitfalls. The project's founder cites data from Cardano Scan as proof that the ecosystem continues to buzz with activity. Cardano may hit $1 trillion market cap, it's just not anytime soon. The coast is not quite yet clear. But that's going to do it for today's video. Make sure you click on the subscribe and notification buttons, and we'll see you in the next video.